Good afternoon, good morning, good evening, from whichever part of the world you're joining us. A very interesting topic that we have today, Mission Possible, unlocking the future of banking with NextGen Core. Look, NextGen Core systems, they provide banks with a cloud-based, modular, and flexible banking infrastructure. It enables banks to completely reimagine their business models and really leverage the power of digital to the fullest. Case in point of the growing importance of NextGen Core. In the years 2017 to 2019, 3 years, only 1% of core deals were NextGen Core. And that number jumped to 15% for the next 3 years, which is 2020 to 2022. And I think the trend is simply going to become bigger and bigger with each passing year. So thank you so much for joining in. My name is Nikhil Gokhale. I am the Director for Research and Digital Properties at IBS Intelligence. Me and my team provide real-time data-driven insights on financial technology to clients, be it core banking, digital banking, payments, lending, and many other banking technologies. Joining me on this very interesting discussion are Tarvo Okmis, Director of Engineering at LHV Bank. Tarvo leads LHV Bank's engineering function and has played a critical role in redefining LHV's technology strategy. It's on his watch that LHV launched a cutting-edge BaaS platform for all businesses. Welcome, Tarvo.
Thanks for having me here.
Next, we have Brian. Brian is a highly accomplished executive, renowned for his clarity and expertise in driving real-life business outcomes. He is the founder and a former CEO of Phoenix Digital Bank, and he's played a pivotal role in revolutionizing Vietnam's banking landscape. Brian, welcome.
Thank you. Thanks for having me. Looking forward to it.
Last but not the least, Edgardo Torres Caballero, Chief Revenue Officer at TUM. He comes with more than 2 decades of experience in the IT FSI space, and he understands core banking, I would say literally to the core. So welcome, Ed.
Pleasure to be here. Thank you.
Right. So next 50 minutes or so, you're going to see me rack the brains of my experts here, trying to find out, the whys and the hows of core banking. To start the proceedings, let me call upon Ed so that he can set the context of what we are going to talk about today. Ed, over to you.
Very good. Well, pleasure to be here. I'm going to share some slides and some thoughts, but it's basically as a baseline for our discussion. If you will pass to the next. So basically, as we come a long way. If we look at the historical context of technology in banking, hard-coded system, closed systems, on-prem, batching, manual operations, and stuff like that. The last decade, we've moved into a cloud world, the public cloud world, basically, where we operate with loosely coupled architectures. We basically implemented multiple systems where we can interconnect via APIs, leveraging the power of best of breed components out there in the market, especially fast-growing fintechs and companies that provide a bunch of different services, allowing the banks to diversify their offering. We've basically coming to systems that are real-time, right? Systems that now, in a way, do not become legacy because you can actually service them on a continuous basis and do releases as it relates to core banking, not having to wait for many years to do upgrades on systems. So in a way, this has been a paradigm change in the way banking operations are run. If we take a look at it, and if you will, next slide, this is basically having the banking industry and the non-traditional financial services institutions provide a new array of different services. Other than, which is very important, making these operations more efficient, cost saving, enhancing the way things are provided to the end customer, which is ultimately the end goal, enhance those services and get closer to the customer. We also see how these new technologies actually allow the banking institutions to basically embrace these new technologies within their offering. If we understand this from the vantage point of the end customer, at the end of the day, you're trying to reduce friction in between the institution, their procedures, or faster onboarding processes. You're trying to also embed new technologies in between that allows you to basically use data in a better way, so you can provide better offerings as you are basically supporting, for example, the SMB segment with a new array of lending options in the market, embedding these solutions so you can actually basically extend operational activities. And if you understand this also from the vantage point of the banks, the competition that this has generated with non-traditional institutions also pushes in traditional ones to behave and move faster. Because banking nowadays, you can launch them in months and not years, especially on traditional brick and mortar organizations. If you look at the speed of implementing EMIs or new digital banking institutions nowadays with a basic MVP accounts, a debit card, and basically basic transactions like fixed term loans and the like. The speed of these implementations, the cost effectiveness of them, has transformed the way the industries or the industry basically behave. So I think ultimately when you look at this, the technology has enabled most of these things. The challenges on the flip side come from probably the expertise on regulatory aspects that impact most of these operations. So the newer players out there are sort of learning, ramping up their knowledge on the compliance space that they now operate or are intending to operate. So they were faster on technology, but now they have to basically, embrace, compliance aspects. Also, the increment on fraud activities pushes the institutions to also embed new technologies, allow them to basically have safer operations. So in this sense, I think it's the trade-off. If you go back probably even less than 10 years ago, of even considering launching a core banking operation out of the cloud, studies in the past were, are you able to basically deploy this on-prem? Nowadays, it's very common to hear which cloud are you actually running, right? AWS, Google, Azure, any of these different vendors in the market. So in this sense, I think we've come a long way. Today, we're going to be sharing some of these experiences. Next slide, please. In relation to our install base of clients, from the TUM side, we are leading digital core banking platform, which have expanded over the European markets and the UK, and now we're sort of in a process of expanding for the Middle East and additional global markets. I think the commonality of what I just explained is reflected in the clients that we service. Traditional ones coming from tier 1, tier 2, tier 3 institutions, non-traditional ones, telco companies launching EMI operations, traditional lenders in the market. They're launching faster to market in months as opposed to years. They're seeing cost savings in the way they are basically running their operations. They've been able to basically enhance the offering with additional ecosystems out there through the exposure of APIs and embed new financial services that differentiate them in the market. So I think in a nutshell, this brings an opportunity, and I hope this is basically just setting the tone of the conversation today. For more of these opportunities to actually enhance and grow, maybe one topic I will be discussing today is migrations coming from all legacy systems, and we do have a case in question today. Because ultimately, in order to exploit the benefits of all these technologies and all of these new, capabilities, the question that lies is, can you actually migrate from legacy systems with all the risks that are involved, with all the complexities, and be able to actually consume this new technology in a way? That's a big question, because that's always been a complex topic for banking institutions and CTOs in the banks. And I do believe it's possible. That the state of technologies has evolved. Nowadays, you can do smart migrations and properly plan these things out. You can solve endpoint solutions in banks and not necessarily to go on big banks, strategies, and ultimately allow the natural evolution of adoption of this new paradigm in the market. So let me stop there. The idea is just to set the tone for the conversation, but I do believe in a way there are specific cases of success. And a bunch of them has to do with the way TUM has basically evolved in the market, where migrations are possible, where launching new operations in record time basis are possible, and where the effectiveness and cost effectiveness of these operations with new technology is basically leading the path.
Perfect. Ed, thank you for setting the tone. I think, some very powerful numbers here that I can see on my screen here. You're talking about, migrating over 1 million accounts, having return on investment in 12 months. I think, anyone would take those, right? Very interesting numbers, powerful numbers. And I do believe, when I think of core migration, I literally, imagine this to be a heart transplant operation where you are transplanting, you're putting a new heart in a body with the bank functional all the time, right? So I think this is a high risk, and as you said, we will talk about it in the course of today's 45 minutes. So before I open the room for questions and answers with all of you, I am going to hit the first poll question. I want our audience to be as involved in the conversation. So question number 1, which of the following is the most pressing challenge that banks face with the current core banking systems? And assume here that we're talking of current core banking systems means legacy systems. Is it integration with new technologies? Is it scalability and performance limitations? Is it high operational costs? Is it difficulty in implementing regulatory and compliance updates? Or is it lack of speed and flexibility? I think it's, if I, unfortunately, the speakers cannot respond to this because it will be almost like, biasing the poll. But, if you ask me, I think, I wish there was a 6th option, which was all of the above. But what we want really, we want our audience to actually, choose one so that, we know whether what we want to cover today is relevant for our audience or not, or we can just quickly, be agile and focus on that, right? So, all right, I'm going to end the poll in the next 3 seconds. Last chance. And poll. All right, so a speed and flexibility to enable innovation. I think that's the number 1 choice, followed by integration with new technologies. And the third being the operational and cost. So I think it's less about the cost and a lot more to do with innovation, a lot more to do with new technologies. So again, let's start with the basic. Brian, I'm going to start with you. Keeping it very crisp and clear question for you. What are the top three challenges when it comes to legacy core?
Okay, so firstly, great framing for the whole. So I'll probably end up repeating. I suppose I'm thinking through my answer, trying to buy some time here. Probably end up repeating a few of your messages, but I suppose I think to answer this question, I think we need to do a little bit of framing first, because I think the challenges are the same, but the depth or difficulty of those challenges depends on organization. And I'm talking about incumbents rather than, what I've been doing for the last, 8 or 9 years building neos. So I suppose the first we got to look at across, I'd say probably 3 dimensions to get to the right answer. I think the first one is, what the hell is a core bank? Because it's quite surprising, how many different answers you'll get, from working in traditional banks. We'll see a lot of people come back and say a core bank is, you will find it doing everything from calculating RAROC. In some cases, I saw to generating front ends to managing FX positions. But in fact, this is an issue. A core bank in itself was never meant to do this. A core bank was meant to be very much a thin layer, but it has, well, in my view, and I think in the new core banking provider's view, but it has got quite thick. So core bank typically was operating in the back office, generating, managing the ledger, doing product configuration, the ability to produce reg, but it has transformed into something much larger, making the problem bigger, forgive me. I think we also need to see, a lot of organizations are on different periods or steps of their kind of migration or evolution in core banking. So as I kind of see 3 generations, and I'm old enough to have worked across all of these 3 iterations of core banking. I think the first one, the mainframe, which is very much a replacement, a ledger in reality with some product features in it, but primarily a ledger. And we got to, kind of making that better with some client server improvements where, I was involved quite heavily in my younger years. Then we get to the 3rd generation, which has been a problem. And I think we've seen this in the industry with so many failed transformations, where the older core banking systems, be they on-prem or third-party or package, started to wrap their old core with APIs and REST services. And that didn't fundamentally address the real reason they were implementing. In fact, what they were trying to do was create better versions of the previous iteration, where, as we know, banking has changed. It's not going to work. I suppose as I go through it, I think, always of that saying that old keys don't open new doors. And now we're on the 4th generation, which, represents a completely different banking landscape and is responding very much, I think, to the transformed needs and, most importantly, expectations of our customers. It's quite interesting, and I'll move on. I've spent most of the last 10 years in Asia. And, if we look at the top 100 banks in Asia Pac, the average age of the core banking system is 17.5 years. So, the issue is far from addressed. I suppose the second dimension, I'll get through quickly, the banks are no longer positioned for those previous generations of core. They now belong to an ecosystem, which includes tech companies, AIs, neobanks, non-bank lenders, etc. And the winners in this ecosystem, have to have a core that leads with customer experience or supports customer experience rather than just products, because products are enablers and are commodities at this stage. So, and I think finally, what it takes to succeed is, in reality, what these new cores allow is that, to succeed in this financial ecosystem where you're no longer the bank and you own it, you have to be very hyper relevant to customers. You have to be emphasizing this experience. So, to answer the question, I think the major challenges of legacy core banking is they're unable to, because they weren't built to transition to this economy of customer experience. Okay? They were built for product. And trying to, and I suppose the second one, trying to actually refactor these old core banking systems, wrap them, refactor. You can do it, but you can do anything. It's how deep are your pockets and how much time you have and how patient your shareholders is in your board. But they're very, very slow to change. Okay, and they actually assassinate an innovation culture because everything takes so long. So you're not going to innovate. They're very product focuses. Small changes take months because they're monolithic. They take testing. It takes many months which in reality, in banks that I've founded or run, could take days, could take weeks to months in traditional cores. And I think the other third one, and there are many more, back to Nico's point, it's operational risk. The costs of running these systems, they are very expensive. The cost to serve customer are very expensive, and the cost to serve risk. So if you look at security, scalability, reg, compliance, we saw how difficult it was for traditional banks to implement GDPR, which would be relatively simple in a digital core, or even open banking. So finish up. I think traditional core banks are not built. Right. Sorry, you're going to shut me up. Okay, I'll finish. Next core systems for me, are the ones that are prioritizing low cost. I think intelligent automation, fast change, and I think data-driven decision. And, they have got the benefit, of course, as we'll talk in a minute, of having modular API, cloud, and headless architecture. So hopefully I've answered your question. I do get a little bit passionate when I get to...
You did. And interestingly, Brian, even as you were speaking, when you spoke about the first point that why there's a problem with legacy core, they were never built for the traditional the digital customer journeys. The immediate thought came up was, why is the answer building NextGen Core, and why is it not building better cores, better core systems? And you quickly, even before I could ask that question to you, you answered that in your second point and your third point. I almost feel like you already started to answer a lot of the points that you want to cover.
Nico, I read all your research. That's where I got all my information. So I suppose to sum up, I'm built for rugby, not ballet. Okay, digital cores are the ballet. Okay, or as one of my dear friends said, trying to do next gen digital banking with an old core is like trying to teach an elephant to tap dance, if you want to keep that along. It's not the core's fault. They just weren't built for this. Similar to me in ballet. And I'll close at that.
I would actually like to add. I would like
yes,
to like
please
to add.
Go ahead. Please go ahead. Yeah.
I really agree what Brian said. As I think everyone kind of understands what's lending, what's everyday banking, what's savings. The question is actually how you are reaching to the customer. What's the experience? What's the additional value you're providing? And building that on top of the legacy core banking system, literally no way. Or you are building it, but then the go-to-market is going to be so long that you are missing that opportunity. And that's the key thing. I believe it's pretty much driving everyone towards to the kind of like at least thinking or discussion about how to move away from the legacy core banking solutions and what are the advantages actually going to bring to take in that next gen core banking solutions.
I think the biggest warning, guys, and like I travel around the world a lot, primarily because my marriage wouldn't survive if I was home 365 days a year. But while I'm traveling, I meet a lot of failed transformations. And this is really important and a really important message. I've been in banking 30 years. I built banks, traditional, whatever. The last generation pre this were the big software providers who put lipstick on a pig. They told you that this old monolith we could take a concrete block and draw little lines on it, and that made it like Lego. No, guys. And I've many executive friends who've had those red-faced moments after $1.4 billion spent on a core banking replacement, when in fact they weren't addressing the real problem. And I think we all agree, the real problem is how do you differentiate? How do you move away from commodity? How do you delight your customers? How do you move away from this wallet focus and move to this experience focus? Because that's where you're going to win, and we see it time and time again.
So, while I have you, Darbo, talk to us. You mentioned, that you needed you felt the need for having a NextGen Core system, and you went ahead and within the LHV UK operations, you upgraded to a NextGen Core. Talk to us. How has the shift to a NextGen Core? How has it transformed your operations? How has it improved customer experience?
Yeah, sure. So before answering to this question, I'd like to give actually a background why we actually made that choice. As LHV Bank Estonian entity, or the bank in Estonia is already more than I think 20 years company, and have the long history. Although they started from the investment and then slowly moved to the everyday banking, then moved to lending, savings, corporate banking, so on and so forth. And this actually is one of the signs. If you see the evolution of the kind of like their company growth and releasing the new products, then the question is how they have actually built it. So is it a microservices architecture, or is it pretty much adding all the new functionalities on top of the kind of get one monolithic so-called core banking system? So when LSV decided to open the UK bank or apply the banking license in that, my role was really to focus on the technology strategy and understanding what are the main or what are the key benefits we would like to get out from the new bank, the new customer experience. So it's not about the technology as such, so what you're actually proposing. So you can go crazy with the technology, but the question is what you would like to achieve. So you're starting from the customer, and this is what many banks are actually missing. They focus really about the processes, about the regulatory requirements and technology. It's so the new kind of like generation. What I have seen as well in the practice, they are flipping the coin and saying we need to think about customer experience, and then we are applying the regulatory requirements on top of it. So we can actually operate in that regulatory landscape, still thinking about customer experience and how we are approaching it. So all these things actually were driving us to the position where we leveraged what that actually means to build our kind of like take literally the copy of our own current or the actually not current, but the previous core banking system, implemented it to the new entity, or versus going out to the market and understanding what the next generation core banking can actually provide us. So few key points. What we were actually looking to that was pretty much the service segregation. So from the operational resilience perspective, if you have one monolithic, if something fails, your full bank is down. If you are services segregated, you can have, for example, outage in lending, but no, like the service is up and running and no impact to the, let's say, everyday banking or the card payments, which is really critical for the retail customers, or in the payment stack, even though that is up and running because it's not coupled, it's decoupled. So you can actually really focus on different services and service level agreements. In the monolithic system, you only have one service level agreement. So or like one like the service segregation was another thing. The third thing was go to market, low cognitive load for the team, literally low cost, can have that as a service. So how can we actually achieve that? Even if it's like an internal service, then there has to be a low cost. So all these kind of like a key criteria were driving us to the position where we saw that the existing core banking system is really expensive, mainly from the maintenance perspective. It requires 2 full, even sometimes 3 full size of teams to run, and there is a huge cost on that. versus if you're going to the NextGen core banking solution, they are providing that thin layer for many banks and institutions, which actually balancing that technical depth and balancing that cost you are otherwise paying for your own purpose only. So we actually decided to take Toom as one of the next generation core banking, mainly because of the factors that they are really microservice based. As Brian mentioned, some of the old players, they are just saying that they are now next gen, but only having the API layer. But underlying platform is still monolithic, so you have no way to speed up. So speed up in terms of go to market and so on. Now the answer to your question about what's the customer experience. So currently we are having we have improved our service reliability. So previously running everything on top of the monolithic, every small error or a bug in the system caused actually literally the issue across the services. Now we can control that in a better way. We have introduced the quality gates, which are easier to implement. The tooling we can actually integrate just to make sure that we are automating a lot of quality, lot of release related processes. What you can actually do having this segregated service concept already implemented. Second thing is customers are now able to integrate quicker. So the quick to go to market time has reduced. And the third thing is that now as we are having NextGen Core banking platform, so from the operational perspective, product had to change their kind of like operation. So they are able to define new products literally through the APIs or through the interface. So they don't need particularly any of the kind of like a IT or engineering resources, except when they would like to change now the customer experience. So, but as we are operating mainly in business to business, so APIs, then our customer experience doesn't change so much, except if you are introducing a new version of API. So they can actually try out, test it out, and reflect the customer feedback faster, quicker, and then trying to understand how the market is shifting from that end.
Perfect. I think from what I'm hearing is, I think it's the faster go to market. So you're able to get to customer needs faster, and of course overall less expensive to maintain. Really stood out as big points. Of course, there's several points that you made, and that's where I'm going to bring you in, Ed. I know some of the points that Tarvo raised, something that I would want to bounce off you as well. Do you agree with what Tarvo said, that there is some real difference between when you talk about legacy core versus a next gen core? Is there a real difference? Okay, or is it simply a marketing gimmick, or is it old wine in new bottle? We're putting you on a spot there, Ed.
No, it's good. But there is. I mean, one thing is when you try to adopt the cloud, or if you are actually born to consume the cloud, there's a bunch of different services that you can actually extract out of the cloud and all systems. I love what Brian said about the lipstick reference. There's many old systems and legacy core providers that basically, there's an option. They cannot just re-platform everything from scratch. They have an existing business to support, right? So it's impossible for them just to change everything, which means the new market demand has to be addressed in a different way, which is this holistic basically concept. And ultimately, there are challenges for these old systems That's the most important one, basically, for me, has to do even with probably 2 or 3 digital core banking systems. Some of them are actually monolith. They're not even microservice based. So that brings a set of challenges because it produces a backlog, even on producing features and capabilities when they actually have to release them, because they basically have to break lines on this whole system and recode it. And at times they might even hit a ceiling on those things, which means that probably some of these supposed newer generation cores that are monolith will basically won't be able to scale. Let me just put it like that. And that's a big issue because ultimately you need to scale these operations. You got to be flexible. All this flexibility, launching fast and everything we've been discussing, it's real, right? You just don't have the luxury not to make that happen, especially for those that are launching new value propositions in the market. But I do want to reclaim, I loved it when Brian, both Tarbo and Brian mentioned a few things, which I want to recap, and it goes along the lines of these things. Defining what the core is, and frankly speaking, I speak every single day with prospects out there, including like really old traditional banks, massive, 100 billion and above asset-based banks. And at times there's confusion. What is the extent of what the core banking system has to do? It even gets into onboarding processes and stuff like that, which is nothing to do with the core, right? At the end of the day, there's many things you can modernize and implement technology about those things, but ultimately it is the definition of a proper extent of these things that allows you then to compose a proper architecture where you can then be fast, cost-effective, adopt the best of breed components that you actually need for whatever use case you are actually launching. So again, Brian mentioned it. It depends on the institution, what they want to launch, or if they're actually migrating something or launching something new. That may change the strategy of what you're doing. And at times might be the case. And in the case of TUM, if there's data residency requirements, such as in Saudi, for sure, we put our software in Kubernetes and we go down there and we put it on-prem locally. Because ultimately there's certain limitations in that sense. And we don't want to be limiting what we do on the SaaS on a more mature geography where these things are already put on the cloud. And we are flexible on those things. So it depends on what are you trying to solve. The other one is, and I think it goes back to Tarbo, they actually focus, which is the right way to do this. What are we trying to launch? What is the expectation of my customer? How do I differentiate in the market? And then when you define that, then you go backwards and you say, these are the best technologies. This is the best process. This is the best architecture. These guys have been around for 20 years. If they actually had replicated what they built in their old legacy in the new, just because they wanted to comply 100% with it, they wouldn't be as fast. They wouldn't be as successful. And I'm pretty sure, and I'm involved in the process as a core banking provider, probably with more difficulties than we had. So the vision was right. They built what they needed to build for this new challenge, not replicating the old. And I've seen that very often, very often. I have a story of a client after 2 years and a half. We mentioned these things during the sales process. We said, why don't you just basically build what you need going forward? No, I need to replicate, there's 100,000 different procedures. We have to comply with them all. And after 2 years, the client came back and said, frankly speaking, in this new system, we have been on only 50 processes, and it would do the same. Because it's new technology, right? You can do many more things if you reimagine banking. So banking has to be reimagined considering the state of technology that we have today. So I'll leave it at that, but I think it's very valuable to hear from the customer side, from experts that we have on the call today. So ultimately, the technology per se can do many things. And again, as Brian said, if you have actually patience, money, and the buy-in from the board, with Java, you can build a rocket and go to the moon, but that's not the end, right? You got to be cost effective. You got to launch fast. You got to capture, new clients. And therein lies the challenges. And you need to understand and basically have a proper strategy, proper architecture know what you're buying, and then you're going to exploit that in a beneficial manner, and not just replicate the old, because then frustration sort of knocks the door.
Indeed. Yeah, I would like to actually add that one of the, I would say, challenges for us was actually as well to define what core banking platform needs to own and what's the scope of that. So initially, I think when we started to explore the market, we were like crazy. Like, can we have, you know, the customer portal as part of the core banking? Can we have some payment integration as part of the core banking? Can we have this and that? And then we realized that, but this is not the core banking. This is a full platform. So you, as Ed said, everything which is actually the differentiator, the customer experience, is not core banking. Core banking enables that. So it's like we are calling it system of record. So all the flows we are building, we have to have one place where it is keeping the latest state, the system of record, having it segregated and can actually have certain processes, let's say, just keeping the status, keeping the history, keeping all the transactions, all these things. But everything, the business logic, the product logic, the experience is out from that. And that gives the speed, that gives the segregation and enables actually you know, avoid that kind of like massive testing and all these parts as well, because you can actually only change the experience and not the core banking, or vice versa. Changing the core banking logic, understanding what's the data architecture you have to expose out from that to, let's say, regulatory reporting or business intelligence. But that doesn't actually change your experience.
Very, very interesting. I think, you know, I heard a lot of jargon, but I also heard a lot of simple words, I think, which ultimately stick to your mind. Ultimately, you end up remembering. I think what stuck to my mind very simply was the flexible, scalable, and, you know, the ability to use best technologies. I also loved the fact, Taro, you mentioned that, you know, in your, you know, opening response, you mentioned that how, you know, you had to think from a client first perspective when you're looking at the core banking system. But as you started getting into what exactly is core, you realize that, you know, everything that the customer touches is probably not core. So very interesting. I think, you know, you already started talking about the journey. Before we go into the journey, I have two more things that I want to really quickly do. We have a question from Vasant Madhav on the Q&A window. He says, what is the architecture of the NextGen Core Banking? Is this cloud native and microservices based? If yes, how many services available on microservices? I think we covered the first two elements. Maybe Ed, you can talk about the third one. How many services available on microservices?
But in the particular case of TUM, we have 38. You need to understand also the scope. There's not many of these new digital core banking systems that actually were born natively with payment capabilities and even card management software capabilities. In our case, we do have those things. Frankly speaking, I think it comes from the vision of the company of having a core and an account without a transaction. Banking doesn't happen at the end of the day, right? You somehow need to enable these things. So in that sense, we went beyond the core in having that, so that extends the microservices that we have. I think it's important to understand also the extensibility of the core, and the microservices allows you to actually do these things. And to Tarbo's point, an architecture that is built to basically sustain changes in time. Even if the institution, if we are not serving well any particular customer, by having this architecture in a more flexible way, you can even subtract and basically plug in new end technology that may supply those needs. How many of them, frankly speaking, that's a question for a proper CPO that may define those things. But ultimately, I think the simplicity, it's important in relation to having an architecture that is workable with, that you can basically exploit in an appropriate way, and not stories that I've heard about, companies where they have, contracting models that are multiplied in thousands, because you end up with 2,000 lines of code, which I heard the study the other day. And that contract supposedly it's 35 contracts that produce one product. I think that's not where you're going to go ultimately. But Brian, you have an opinion on that?
Yeah, guys, I think there are rules to get to that number, and building on what Ed is saying. I'm ex-CTO, so obviously I've been challenged with this, and most recently I designed this kind of model for a digital bank. But you have to adopt a domain-driven approach. Okay, so start with domain-driven. And then you have to have massive amounts of governance around this, because the granularity, if you see, as Ed has said, I've gone in, I've seen, we're microservice. You're not. You're just a load of messy REST calls. Microservice isn't just a set of a gateway and loads of messy REST calls and happy executives because they can say, we've got microservices. By the way, if you ever hear an executive talk about microservices who's not an IT person, leave the room. Okay, it's my general advice. Okay, so take a domain-driven basis. You know the domains. Go from customer, go from product, etc. Take the IBM. Have some good work done on this. Oracle does some good work on this, and they're pretty much there. So the design patterns are readily available, but governance is key. Governance is key, because you could end up having a microservice mess. Which is actually worse than your monolithic. Okay. And I've seen that happen. So that would be my recommendation. It isn't that difficult. Do it by domain driven. These models are readily available. And challenge. You want to have as few services as you possibly can, and getting that balance between few and little, because of course, if you're calling one and you've got to do more work in the gateway or further down, but they're decisions that, you really need a good architect to be making those decisions and making the mistakes, because of course you never get it. You just get it more or less right.
Yeah. In fact, that's where I'm starting to now going to focus on going forward. We just spoke about a lot about the why part, why core banking, why NextGen Core. And I'm going to get into that how part, right, which is how to get to NextGen Core, right? Before that, just let's see what our audiences think about the point about migration. I'm starting to get a couple of questions on migration, right? So let's do a quick poll on migration. When considering a transition to NextGen Core banking platform, what should be bank's primary focus? First, is it reducing total cost of ownership? Second, leveraging data analytics and AI for personalized services. Third, speed to market. Or fourth, is it strengthening cybersecurity? All important again, I feel. I wish there was the option of all of the above, but we are putting people on the spot and asking them which one they choose or which one they prefer. And I'm not going to tell which one is leading right now, because that could influence what people would choose. But I am compelled to say that, it's very interesting that reducing total cost of ownership is not one of the top scores. So I'm going to stop in 5, 4, 3, 2, 1. And there are the results. Very interesting results. Speed to market is the number one. I think I see a few nods from my experts. So I think they're very, very much in line with what they were expecting. Excellent. So let's do this, right? Let's focus on the how part. How do we get into core migration? There is a question, in fact, on the Q&A board as well, which says, when you have a challenge in terms of data cleaning from legacy to the new NextGen cores, I'm going to throw this open to all three of you. What are the approaches for migrating the core banking systems, and is there a right way for anyone? So maybe I'll not let you fight. I'll let Ed start. Ed, you have the floor for a couple of minutes, and then we move to Brian and then to Tarbo.
Well, I think ultimately probably Tarbo and Brian as a former CTO will be in a better position. But from my side, I think it's important to understand that at times there might be smart ways of doing these things. If you have, let's just take a micro lender and there's loans that are actually sort of in short cycles and the like, don't migrate them, just let them die, basically fulfill their life cycle and create the new ones in the new system, right? In a way, under whatever considerations, you're going to have to build for a parallel system while you're transitioning. So somehow you need to build up your budget and organize that. And Tarbo may share some experiences about that. Also, you might have, don't do necessarily, the case of LHV is different, but certain institutions, you might have endpoint solutions as you want to fix. You don't have to basically go all across the institution and change everything at the same time. So there's different strategies out there. Ultimately, I think data integrity, making sure whatever the core is receiving the proper information and the fields are properly addressed. There's multiple different strategies there. But again, I'll defer to my colleagues here because ultimately they're the ones that put those strategies in place.
And before Brian or Tarbo, you go, I'm going to throw in a jargon, right? So, we always, there are words such as hollowing the core and the likes, do they even exist, something like that, or is it just jargon? Brian?
I think I changed the question completely, guys. We're asking a question that no longer makes any sense. Why core migration? No, core migrations were about doing what you did before better, faster, more flexible. Okay. The question now is, when I'm looking, being a CTO, CEO, CRO, but as a CEO, I'm sitting there in front of my shareholders, and as a business and sustainability, I'm saying, well, how do I become more relevant to my customers at a lower cost and make a higher return? Okay, that's what I'm trying to do. Okay, and a lot of that you're not going to find in the core. The core supports that. Okay, so I don't like the concept of customer journeys, and you know what? It just makes consultancy companies wealthy in many cases. Okay, it's about boiling down to what are the key metrics to make your business successful. Okay. And starting with customer. Okay, so when you identify that, of course, there are going to be elements of core there. And there are going to be elements of mid-office and risk management, be it lending, be it fraud, be it whatever. And there are going to be elements of front office as well. Remember, core does not be, I think, Ed, you showed your old past there by saying loosely coupled, okay, architecture. But there was even a bigger architectural principle, and we seem to have lost a lot of this knowledge for some reason, called separation of concerns. Mm-hmm. So when I'm building banks, I look at a taxonomy, I look at the process, and I say, what is core concerned with? Okay, what is mid-office, whatever, but I look at it from those KPIs from those business. Now, does hollow out work? Yeah, it does. So as an if I put on my architect rather than the CEO, okay, when I identify these key tipping points that are going to make a difference to my customer, both on my top and bottom line, there are architectural approaches. It's not rocket science. We've seen architectural approaches, hollow out the core, fine, which means incrementally move away from your business. When I build a Neo, I don't have that problem. I don't have a business. I can just go and build it. When I've got a business that's generating returns for my shareholders and serving my customers, of course, Big Bang doesn't work. We know Big Bang doesn't work. Okay? It can't work. Because that would mean that you have developed the most perfect implementation, most perfect software package. And then you have the regulator all over you. You've got, your business could be fundamental. You could have a cyber attack. You could have so many issues. So you've got to incrementally move. So what I would suggest is to hollow out the core, which it really means just move these income or customer interaction points incrementally across and use the technology that's available or the design patterns available to do that safely. So, for example, if one of you guys look at strangle patterns in architecture where you can strangle the old and move it across. Look at patterns like CQRS where you can actually move a lot of the workload away from your old core system using event-driven, blah, blah, blah for you techies out there. But at the end of the day, it has to be an incremental move. Now, don't do the following. You cannot make me into a great ballet dancer. I wasn't a bad second row forward in rugby. You cannot take an old core and transform it, because what is attached to that old core is an operating model, is a risk position, is a culture, a people view, a management organization, okay? You cannot change that there. So my recommendation, guys, it's very simple, and don't make the management consultancy companies any more money they should be embarrassed about, okay? And this does not include the likes of the intelligence people who are shouting about this. You've got to build it on the side. You've got to tackle the real issue, which isn't technology. It's your culture, your operating model, and how you view your business is going to be. There is no longer an RTB and CTB, and all you bankers will know that because it's the time of year for budget. What are we going to spend on run the bank, and what are we going to spend on change the bank? We have moved completely now to continuous change. It's CTB all the time. Okay, so how do you support that model? So back to answering the question, don't try and rebake the old cake. Okay, it was fit for purpose for a different interaction and a different world. Build it on the side. Invest in very good architects. They will show you the way where you can incrementally take a risk view of it, where you can incrementally move away. But let's put it this way. If you don't get off your old core in the next 5 to 10 years, you're not going to be relevant. So banks out there, if you don't do it, you're not going to be relevant. And caveat emptor, old keys do not open new doors. There is all of the old successful core banking systems out there are not modular. Because as Ed pointed out, they're businesses. They're not going to throw out 20 years of code and rewrite and then cause every one of their customers to do an upgrade. Okay? Because it's not possible. So you have to look for new keys. And, I'm very excited about too. I'm very excited about, and just as Ed is, about other players in these marketplaces. So new keys for new doors. Okay? Be careful.
New keys for new doors. Brian, I think I will be able to, at least take 5 or 6 of things that you said and put it as headings of some of my articles that I write for.
I read all yours.
So, look, gentlemen, I have maybe a minute or two on the clock remaining. I do want to get you in, Carvo, for the last word. Continue the discussion of what worked for you at LHV in terms of implementing the modern core.
Yeah, and I would like to concur all the previous speakers that everything they said is really relevant and needs to be accounted in when you're thinking about migration. And migration is not only about moving the data from one side of the platform to another side. There is going to be a huge mess if you are missing operations, if you are missing all the strategy, if you're missing let's say even the experience, the internal customers experience. So internal customers are your own employees, how they are going to use it. So the cost of the migration is not only about the technical approach or even the strategy is not only about technical approach. It's about how you are transforming all your operations, processes, all your company culture. And if you're keeping that the same, there is no point. So leave it as is, and you're happy. But if you are willing to change and if you see how you can actually benefit from that change, whatever it is, automating all the incident management, automating some of the customer feedback processing, ticketing management, automating some reporting. So you have to have some key drivers there, because otherwise the bill is going to be quite huge and no one in the exco level or executive level going to pay that or sign that off and say, yeah, go and spend. Nowadays, that's not the case. So what we actually did, we, like, as I said previously as well, we had the key drivers. We are digital bank. We are optimizing our operations. We have a key metrics for cost per transaction, for process efficiency, all these things. So we are measuring each and every quarter how we are doing. And that's the driver. Core banking migration wasn't driver. That was kind of like what was the output? Output is to modernize your technology, to move over to the technology stack, which actually enables you to do these things in your, like, for your internal customers and for your external customers. So our approach now from technical perspective was, again, automation. I personally don't like to build something like that, let's say modern platform, but using the old, let's say, database extracts and importing these in. We look at actually what are the options available. There are like many automated frameworks available, what you can actually introduce, meaning you can get all the reconciliation already in place. You can add it to your pipelines, you can control the quality, and most important from the migration is how frequently you can iterate. At the end of the day, when we did a migration, we iterated migration twice a day. And that's the success you get from the data quality perspective, because you iterate, you learn, you iterate, you learn, you iterate, you learn. And then you're leaving only small portion at the end to say, now it's downtime. And the downtime needs to be minimal, because downtime is your loss. Customers are not able to use services. You have to pay that bill. So this is what we did, pretty much automation and key, like really focusing on the key metrics, what you would like to change as part of the migration.
Fantastic, gentlemen. I think, we are 3 minutes over, and I wish we could have continued this discussion for at least half an hour more. I wish we should be doing 90-minute webinars sometime in the future, but it's fascinating to see how, I had, Brian, who I thought would be talking about the business side, spoke a lot about technology. I had Tarvo, who was from the tech side, and he spoke a lot about business. Mm-hmm. I had Ed, who he represents the NextGen Core, and I wanted him to focus a lot on, the migration bit. But he said, look, I let the people with experience do the talking. So it was amazing how incrementally you've built onto this whole subject that we're discussing today. And I do feel that, we as a team did justice to the topic, which was mission possible. I think definitely, if nothing else, if you are going down the road of migrating to a NextGen Core, you should be listening to this webinar, because this is going to allow you to do the mission, make it possible. So perfect. I would really love to thank all of you, Tarvo, Brian, Ed. Thank you so much for being a part
Thank you. My pleasure.
Of the discussion today, and giving your thoughts without holding yourself back. Really, really appreciate that. Thank you so much, and have a great day ahead.